Hi there. My name is John Thompson, and I'm the founder and lead advisor here at SMPL Mortgage. Today, we're going to be discussing a financial strategy we call the planned trade down. And essentially, this is how you would use a planned trade down of real estate and how that plan can enhance financial and lifestyle goals both today and potentially in the future. So let's get into this. So here's what's happening out there, right? Many Americans we know want more for retirement, but that they want often requires additional financial resources and potential savings. So the problem or the issue is the ideal lifestyle in retirement really does require savings. Even the top 10% of earners wish they'd saved more. Healthcare needs, as we know, are much higher than the most expected. And inflation is increasing demands on existing savings. And so investments requiring more and more risk for lower returns, which all of those things work against the idea of sustainable retirement for many people. Much of the retirement income we may be living, however, we may need for living is actually inside of our homes. An asset that for most families has appreciated much more than many people expected originally. So the great opportunity is that real estate values have risen dramatically over the years. This wealth probably, and may not be in your plan today, or at least maybe hasn't really been considered in any great degree. Living in a smaller house could actually require much less effort from a sustainability and lifestyle perspective. And you could certainly design a new life around a new home. And then as an additional bonus, a smaller home means smaller expenses. So let's talk a little bit more about this. For people that are fortunate enough to own a home and have substantial equity, there's a unique opportunity here where there really is a solution. So using sort of these unplanned real estate sales proceeds in the overall financial planning process could provide flexibility and options that make retirement more financially, flexible. So that's a wonderful thing to kind of do, right? So here's kind of the idea around the solution. So let your home pay you back. So take that unused asset and convert it to a usable asset by trading down. Buy something new that to you that suits your needs, and maybe utilize the unplanned wealth to do more. Receive the house sale proceeds largely tax-free, depending on where you live and what your living situation is. And so this is really the essence of the planned trade down thing. So how does it work? So freeing up idle equity through a planned trade down can solve for different financial challenges or enhance a plan or dreams for really specific retirement lifestyles. So you sell your home, you buy a smaller home in the location of your choice. You transition all those sale proceeds into strategic savings, right? So you got to plan through this. It's not money just to blow. You benefit from the lower living expenses. You coordinate this wealth with your financial advisors or other trusted advisors. And ideally, you're enjoying a simpler, less stressed out lifestyle. So here's an actual case study of a client. They're 59 years old, 57, 59, they're a working couple. They got $1 million home, $150,000 mortgage. They got $250,000 in total savings, a net worth about $1.1 million. They both plan to work until age 65. They need to reduce their expenses now and increase savings dramatically over the next 8 years. This is what their advisors told them. Their goals, though, however, are to help their kids with the home purchase. They want to travel. They want to have an active retirement lifestyle. And they want to create a plan for long-term care and retire on time. They don't want to extend work, even though many people are now doing those kind of things because of these reasons. So here's the plan on the top right. The home is sold for $1 million, $500,000 home is purchased. The $250,000 mortgage is secured, even though they could have paid cash. So they moved $530,000 from their sale into savings and investments. They paid a $70,000 capital gains tax. They added a life insurance plan and long-term care policy. At age 62, they plan to investigate and refinance maybe to a reverse mortgage to eliminate the mortgage payment for the rest of their lives. And at 62, they will be able to help their children for a down payment with a home. So the results are they can continue working knowing there's a plan with a higher likelihood of success. Stress goes down around their future retirement plans, and the plan is in place for cash flow savings for kids and legacy planning. They've increased cash flow at $2,200 a month. They've added liquidity and protection of $530,000. They've diversified their assets, and they've reduced their housing expenses by $474 a month. So here's a quick chart that we've created that shows kind of the different numbers across different price points. So $1 million home, we'll get this to you if you're interested in learning more about it. Here's the payments. So they're selling this home here, $1 million. They had $850 in equity. Their payments were $1,800. Maintenance was around $1,250. They had $250 in assets, $1.1 million in net worth, mostly in the home. Their investment income was about $833 a month, right? So they could buy a home for $750. We showed it here. The $500,000 with a $250 mortgage here, or a $250 home with a $125 mortgage over here, depending on where they're purchasing in the U.S. All right, so we focus on this one here, this $500,000 home value, $250 in equity because they've got a $250 mortgage. The payments are a little bit higher here, but their living expenses are much lower. They paid the capital gains tax. Their investments have grown to $780,000. Their net worth is pretty similar to where it was before, a little bit over $1 million. Their investment income, though, has increased significantly, and now they have much significantly improved cash flow. And when the reverse mortgage kicks in, it's going to go up by another, a significant amount at that point as well. So that's the basics of the strategy. We'd love to talk to you more about it. If you find it interesting, want to learn more and do a specific case study for your client, please let us know. So this is the overview. We certainly look at your situation, create a customized plan, and then engage around that plan to determine if it's the best way forward for you. Thanks very much, and let me know anytime if you have questions or thoughts.